Simply put, Qualcomm is the global leader in connecting people to information whenever and wherever. The company creates communications equipment, cell phone microprocessors, cell phone modems that connect with cell towers, and they are in just about every cell phone in the United States. When screening the companies, I wanted to see the price relative returns. I took advantage of the HOLT database and regressed CFROI against HOLT adjusted book value. The size of the bubbles indicate asset growth. Higher CFROI commands a higher price. Stocks below the trend line indicate a potential undervalued opportunity. The reverse is true for stocks above this trend line. As you can see, Qualcomm and Lenovo fall below the average trend line, indicating that they're possibly undervalued. Versus its competitors, Qualcomm still looks like a buy and has a couple things going for it. What I like about the company is that they're fulfilling unmet customer needs. In particular, the need for information, whenever and wherever somebody wants it. They're targeting correct customer groups. Though most of the United States market is already saturated, the 1.6 billion global user base is projected to grow to 3.4 billion by 2018, indicating that the business cycle is still growing. This brings me to the best part, patents. They make up 3 to 5% in licensing fees for every phone produced by manufacturers. QTL accounts for a significant portion of revenue. This provides a continuous source of income at minimal cost. Fortunately and unfortunately, 50% of revenue is coming from China. For over a year now, the Chinese government has launched an antitrust investigation, whether it is abusing its position. Unfortunately, this investigation has caused some manufacturers to avoid paying fees. Fortunately, Qualcomm has no chance of default, indicating by its lack of credit default swaps, no debt, and about $30 billion cash on hand. Looking back at my initial screen, a CFROI around 15 to 20% yields 50 to 75% upside with a price target of $110 to $130. Margins have held steady since 2004. Asset turns have increased since 2010. Sales have been positive with the exception of the last two recessions. The result, CFROI levels have improved above the cost of capital, increasing towards an upward bound of 22%. Growth has remained around 12%. Surprisingly, the market implies a complete fade to the average company's CFROI of 6% in 2024. I think this is totally unrealistic. I believe the market is going to change its mind. Eventually, the antitrust situation is going to get resolved. Even if China causes smaller margins to cascade into other markets, patents are still worth something. A more realistic scenario would put the CFROI at, let's say, half its current level. This would yield a conservative upside of 54% at a price target of $114.